Inflation is still the Federal Reserve's #1 enemy. Why? Earlier this month, the Federal Open Market Committee, the FOMC, announced its 4th consecutive interest rate hike of 75 basis points, all efforts to combat inflation. Higher interest rates, on the other hand, are squeezing corporate profit margins, putting lenders under pressure, making mortgages much more expensive, and increasing the likelihood of a recession. However, investors are anticipating that the Fed will bring inflation under control sooner than later. Will we be having a Fed pivot anytime soon? Well, we'll find out later in the video. How does Fed pivot work? Well, the Fed has 2 main jobs. One, to maintain the price stability and maximize employment, and monetary price adjustments such as adjusting interest rates or purchasing bonds to manage financial markets are how the Fed achieves both goals. When the Fed lowers interest rates, it is implementing an expansionary or loose monetary policy. That is, they are injecting money into the economy in order to stimulate growth. Meanwhile, when they raise interest rates to cool an overheated economy, they are implementing a contractory or tight monetary policy. Because the economy goes through regular cycles of expansion and contraction, the Fed alternates between tight and loose monetary policy measures. If the central bank shifts from tightening to loosening or vice versa, it is then called as a Fed pivoting. For the Fed to pivot, rates don't necessarily have to go from increasing to decreasing. In our current economy, switching to smaller rate hikes or even pausing rate increases could be viewed as a pivot. Why is the Fed pivot important, you ask? Generally speaking, lower stock prices mean higher interest rates. Companies typically borrow less when interest rates are high because it raises the cost of borrowing money. Then earnings growth typically slows down when there is less available for investment. Now, since higher rates tend to reduce the discounted cash flow variations of growth stocks, they are also hit particularly hard. Investors often sell stocks and other risky assets in a macroeconomic environment where there is uncertainty in order to purchase bonds and currencies, which offer a higher level of safety. So the ultimate question is, when will the Fed pivot? Although the Fed has made some progress in combating inflation, it still needs to do more to reach the 2% target. But now, since the US economy is beginning to show signs of cooling, a Fed pivot might be on the horizon. The Fed pivot will surely start whenever the Fed decides to slow down to raise interest rates. And if that happens in December 14th, after the FOMC meeting, undoubtedly a lot of things will change. So make sure you subscribe to keep up with what's going on my channel. And I'll see you guys in the next video.